In this video, I'm giving away my personal crypto trading model absolutely free. While ICT, Inner Circle Trader, concepts are widely respected and effective in traditional markets, not all of them apply to crypto trading. Through my own backtesting and forward testing, I've found that certain strategies like the Asian Judas swing or the New York Open Judas swing are unreliable in crypto. However, some ICT principles do work well, and I'm going to show you how to build a powerful trading model around them. This isn't just for ICT students. Whether you're a beginner or an experienced trader, this model can become your go-to strategy, offering consistency and clarity in the highly volatile crypto market. Now, I'm offering this valuable information at no cost. All I ask in return is that you subscribe to the channel. We are anticipating this video taking us to 1,000 subscribers, and your support helps keep this kind of content coming. Let's be honest, many people would charge thousands of dollars for what you're about to learn, but I believe in sharing knowledge freely with those who are truly interested in mastering the craft. A crucial rule for this model is to only trade on the 15-minute time frame or higher. Anything below the 15-minute chart is just too noisy and unpredictable in crypto. Trading lower timeframes will most likely lead to poor decisions, inconsistent setups, and even account blowouts. Staying above this threshold filters out much of the market noise and allows for better, cleaner entries and exits. So, if you're ready to learn a proven, reliable approach to trading crypto, one that's based on real data, real testing, and real results, you're in the right place. Stick around as I walk you through exactly how this model works, step by step. The model I'm about to teach you is called range trading, and in my experience, this is the most effective way to trade crypto. Now, at first glance, it might seem overly simple, or even a bit dumb, especially if you're not familiar with the concept. But once you take the time to backtest and forward test this model, you'll understand its true power. You'll probably end up thanking me for showing you this. Here's how it works. We start by identifying a strong push in price, either to the upside or downside. For example, let's say price makes a significant push upward. After this move, we begin to look for two key things, a significant high and a significant low. These 2 points will form our range, specifically the range high and range low. Let's break that down. After the upward move, the first clear high that price creates is marked as the range high. Then, we wait for the price to pull back and form a low. However, not every low qualifies. A significant low is one that holds. It shouldn't be violated immediately. If a low forms and is quickly broken, we discard it. It's not strong enough. But if a low is formed and price pushes upward from that point without breaking it, and shows signs of structure or consolidation around it, that's our range low. This low holds weight in the market and indicates that buyers or sellers are showing real interest. Now that we've marked both the range high and range low, the real setup begins. In crypto, we often deal with what's called a deviation, similar to a liquidity sweep. This is when price moves beyond the range high or low, and then returns back inside. This fake-out move traps traders on the wrong side of the market and provides excellent trade entries for those who understand what's happening. Let's say price pushes above the range high. That's our deviation. From here, there are 3 key steps to taking a high-probability trade. 1. Acceptance back into the range. After the price deviates and sweeps the range high, the first confirmation is that it closes back inside the range. This signals that the breakout was likely a trap and the market is re-entering its previous structure. 2. Market structure shift, MSS. The next thing we look for is a shift in market structure. This is crucial. Let's say a small low was created just before the deviation occurred. After price sweeps the high, we want to see price break below that earlier low. This is your MSS. It confirms that momentum is shifting in the opposite direction. 3. Entry via fair value gap, FVG, order block, OB, or breaker block, BD. Once the market structure shifts, we look for an entry trigger. This could be a fair value gap, a breaker block, or an order block, all valid ICT concepts. In many cases, the fair value gap offers a clean entry point. After identifying your entry, the next step is to mark the 0.5 level, the midpoint, of the range using Fibonacci retracement from the range high to the range low. This level is important because once the price retraces to the 0.5 level, you should move your stop loss to break even. It protects your trade in case the price reverses. Finally, your target should be the opposite side of the range, either the range low, if you entered after a sweep of the high, or the range high, if you entered after a sweep of the low. You're essentially trading from one side of the range to the other, using liquidity sweeps and market. We do seem to have formed some type of triangle pattern, and what I mean by this is, well, look, we have this trend line here, where we have 3 points of contact now, and then on the other side, we now have these 2 points of contact, so we can draw that kind of wedge pattern between some people liked to include the wicks, some people don't. I personally don't really have a preference. I will draw whatever looks the best. So with these 3 points of contact, there are 2 points of contact here, then we can see, the price is most likely going to continue ranging between these two areas. Now remember, altcoins are very much dependent on what Bitcoin's price does. So if Bitcoin has a massive crash, this could definitely fall out of the wedge. Understanding price action strategies is crucial for traders in various markets, including crypto and forex. These strategies analyze historical prices to predict future price movements, avoiding technical indicators noise. They are popular due to their simplicity and effectiveness, making informed decisions based on actual market behavior. They are commonly used in short-term and long-term trading, providing flexibility in trading decisions. Candlestick patterns are a popular price action strategy, providing traders with insights into market sentiment and potential price directions. Recognizing patterns like doji, hammer, and engulfing helps in timing market entry and exits. Understanding support and resistance levels is crucial for predicting potential reversals or breakouts. Mastering price action strategies can enhance traders' ability to analyze market trends and make informed decisions, regardless of their financial market. Honestly, this approach is so easy and effective that it might easily become your go-to strategy for trading cryptocurrency. I strongly encourage you to backtest and forward test it, and if you see it working, please tag me and let me know. I enjoy hearing about your successes. All I want in exchange is a simple channel subscription. That is it. I'll be back with more excellent setups in the upcoming video. Until then, happy trading and goodbye.